Stop what you're doing for a second because the story unfolding right now isn't just another headline cycle. It's a warning flare. It's a countdown timer. And if you've been watching the dollar, watching gold, watching silver, watching the way governments talk when they're getting nervous, then you already feel it in your gut. Here's the punchline up front. 2026 is shaping up like the year where the cracks stop being hairline and start becoming visible from space. The kind of year where people look back and say, that was the moment it turned. And yes, we're going to talk about gold and silver. We're going to talk about the Middle East. We're going to talk about why markets can look calm right before they go absolutely feral. And we're going to connect the dots that most people never connect because they're too busy arguing over symptoms while ignoring the disease. But before we jump in, I need to be real with you for a second. My channel analytics are screaming something at me. A huge chunk of you who watch these videos, you're not subscribed. You're here, you're learning, you're getting value, and then you disappear like a ghost. If this content helps you even a little, do me a favor, hit subscribe right now. We're aiming for 50,000 subscribers in the next 30 days, and I can't hit that target without you. Also, we're now posting members-exclusive videos on a regular basis, and this isn't recycled content. A dedicated team is working behind the scenes to build these deep dive updates only for you, our special members in the John A.G. family. If you want in, click the join button right now or use the link in the description. All right, let's get into it. The year opened with chaos on the geopolitical stage, and the loudest alarm bell has been Iran. Social media is flooded with the same recycled script: intervene, save the people, restore freedom. The words change, but the movie is always the same. And the problem isn't that people care about suffering. The problem is that the narrative is being packaged like a product, sold with emotional urgency, and almost nobody stops to ask the most important question: who benefits? Because here's what happens every single time. Step 1, paint the target as a cartoon villain. Step 2, flood the public with moral language so questioning the plan feels like a sin. Step 3, when the first missiles fly, pretend nobody could have predicted the consequences. And then years later, act shocked when the region is worse off. Refugees surge, energy prices jump, and the currency printing goes into overdrive to fund emergency spending. If you've seen that cycle once, you've seen it 100 times. And that's why I reached out to a veteran trend forecaster, someone who has spent decades tracking the rhythm of empires, the timing of wars, and the way markets react when confidence cracks. I asked him a simple question: are we actually on the edge of a direct strike, or is this just noise? His answer started with a rewind. You can't understand what's happening in Iran by starting in 2026. You have to rewind the tape. You have to remember that Iran didn't become suspicious of the West in a vacuum. There's a long memory there, a scar. And when a country has a scar, you can't talk to it like it's a blank slate. He pointed to the mid-20th century moment that still echoes today. A democratically chosen Iranian government moved to reclaim control over its own resources, especially oil. And suddenly outside intelligence services decided that was unacceptable. A covert operation later, the government was replaced and a friendly strongman was installed. That regime built a feared security apparatus, and the population lived under it for years. Then when the backlash finally erupted, the West acted surprised. But what did anyone think would happen when people are told for generations that their sovereignty is negotiable? Now pause right there. I'm not asking you to pick a side. I'm asking you to notice the pattern. When people are pushed, cornered, sanctioned, and humiliated, the backlash doesn't stay polite. It hardens. It becomes distrust. It becomes nationalism. It becomes radical politics. That's not a defense. That's cause and effect. And here's what makes this moment especially dangerous. The public conversation is being framed as if there are only two options: do nothing or launch bombs. That's a trap. It's a false binary designed to pull you into supporting escalation. So are we on the edge of a direct U.S. strike on Iran? The forecaster's answer was uncomfortable because it wasn't theatrical, it was practical. He said, watch the calendar. Major actions that could shock markets are often timed when liquidity is thin and attention is split. Weekends, holidays, late-night cycles. Not because it's cinematic, because it's strategic. If you want to control the first reaction, you hit when people can't react normally. Now this is the part where people roll their eyes and say conspiracy. But you don't need a conspiracy to understand incentives. You just need to understand that institutions protect themselves. They protect narratives. They protect positioning. They also protect portfolios. Because when you zoom out, war isn't just a political decision. It's a financial event. If the regional conflict expands, energy supply risk explodes. Oil doesn't need to physically disappear for the price to spike. Risk premiums alone can do it. Insurance costs, shipping routes, panic buying, speculative runs, it all stacks. And when oil spikes, it doesn't stay in the oil market. It bleeds into food. It bleeds into transport. It bleeds into manufacturing. It bleeds into inflation expectations. It bleeds into interest rates. And then it bleeds into your daily life. That matters because oil is still the bloodstream of global trade. Here's where the conversation got even darker. He warned about what happens when nations feel cornered. When leaders believe they're facing existential defeat, the temptation to escalate becomes irrationally strong. History is full of last resort decisions that looked unthinkable right up until they happened. That's why gold and silver don't spike when things are good. They spike when the world starts pricing in the unthinkable. And while you're watching Iran, don't ignore the second storyline that flew under the radar for a lot of people: the dramatic operation involving Venezuela's leadership. You're told it's about justice. You're told it's about crime. You're told it's about cleaning up the hemisphere. And then almost casually, the language shifts. Suddenly, it's not even subtle anymore. It's about oil. Let's be adults. Countries don't spend blood and treasure to chase slogans. They chase strategic resources, strategic routes, strategic leverage. Venezuela has oil. And when a nation has oil, it doesn't just have a commodity, it has influence. And that brings us to the third flashpoint that sounds almost absurd until you see how it fits. Greenland. If you hear Greenland and your brain says that's random, that's exactly why it's effective, because the public dismisses it as a meme. Meanwhile, the strategic reasons are real. Geography, shipping lanes, military positioning, minerals, and the long-term chessboard of the Arctic. In my conversation, the forecaster didn't claim certainty about whether an invasion would happen. He said something more valuable. Unpredictability itself is now a feature, not a bug. When leadership signals that the only limit is my own judgment, the world has to price in volatility. Even allies have to treat you like a variable, and variables don't get trust, they get hedged. That's what's happening. The world is hedging. Now here's the cliffhanger you need to hold on to because it connects everything we're talking about. When the world hedges, it doesn't just buy a little insurance, it rearranges its entire behavior. It changes how it holds reserves, it changes how it settles trade, it changes how it prices risk, it changes what it considers safe, and that shift is exactly why gold and silver have been acting the way they've been acting. And this is why he kept using one phrase, wildcard year. Because in a normal year, policy looks slow, bureaucratic, predictable. In a wildcard year, policy looks like impulse. One statement can move currencies, one rumor can move oil. One late-night announcement can erase a month of calm. So why are gold and silver ripping higher? Most people answer that with one word, fear. And fear is part of it, but fear is shallow. The deeper answer is that gold and silver are signaling a shift in confidence. Confidence in currencies, confidence in stability, confidence in leadership, confidence in the future being predictable. When confidence breaks, people move. Not because they're greedy, because they're trying to survive the rules changing. Here's the ugly truth. When governments print, borrow, and promise at the scale they've been doing, the currency becomes a story, a belief system. And belief systems can crack overnight. Now let me slow down for a second and make this practical. When people hear dollar trouble, they often imagine a dramatic overnight event. That's not usually how it works. More often, it's a slow bleed. Less purchasing power, higher cost of living, more volatility, more political tension, and a growing gap between asset owners and wage earners. That's the real collapse. Trust decaying. And trust decays when people feel the rules are rigged. They watch bailouts happen for institutions while regular people get told to tighten their belts. They watch debt explode while promises get made that can't be kept. They watch leaders preach morality while playing power games. So they hedge. They buy hard assets. They diversify. They move money. Now I know some of you are thinking, okay, but what do I do with this? First, your situation matters. Your risk tolerance matters. Your timeline matters. But I can tell you what the signal is. Gold and silver are not moving like this for fun. They're moving because the world is bracing. And if you're a long-term investor, the point isn't to chase candles. The point is to understand why the candles exist. Here's a simple framework the forecaster shared that I think is worth keeping in your pocket. When the world feels stable, people chase yield. When the world feels unstable, people chase safety. When the world feels unfair, people chase escape. Yield looks like growth stocks, leverage, and speculation. Safety looks like cash, short duration, and defensives. Escape looks like hard assets, real assets, and mobility. And right now, the escape category is getting louder. Now let me ask you something, because I want you in the comments on this. Do you think we're heading into a decade where hard assets outperform paper assets? Or do you think this is just a temporary panic that fades? Drop your take below, because I read the comments and I want to see where you're at. And here's the second question. What do you think is the biggest threat to the dollar in 2026? Debt, war, politics, or something else entirely? Comment it. I'm curious what you think the real trigger is. Now, because this is a community, not a one-way broadcast, I want to make a request. If you've had success, maybe you grew your stack, maybe you improved your finances, maybe you made a smart move and it paid off, I want you to share it in the comments. Seriously, even a short message helps other people see that progress is possible. So again, check the description for the bonus links, including the premium WhatsApp channel and the membership option. And if you got value today, hit subscribe. Help me hit that 50,000 subscriber goal in the next 30 days. It takes one click and it tells the algorithm that this kind of content matters. Drop a like if you want more breakdowns like this. Share this with someone who needs to hear it.